Hello. Hello, Scott. Thank you. Hello, Andy.
Hey, Steve and Scott. Steve, are you rusty? Are you rusty today, or did you get back in the groove yesterday a little bit?
I got back in the groove a little bit. Do I sound rusty?
No, not at all. All you said
No,
was
no.
hello so far, so I
All
don't know.
right. Well, you and I have been talking all day. You know that.
Of course.
Um, Hello, everybody. Welcome to the new 2018 webinar, Trade of the Week. Kind of took the last week, which was a shortened week, and allowed people to get back to their desks and also allowed us to kind of get in tune with the jump rope of the market. You know, a lot of times new calendar years, sector rotations and market shifts can turn on a dime as new money does get put to work. So, you know, we took a week to try and watch the jump rope, see what's going on before we made an effort to put forth the trade of the week, which we did, which we will get to, which this webinar is named after, Trade of the Week. So thank you for showing up. Real quick, we are a content publisher. We are a software as a service company. We are not registered advisors or brokers. So this content in this webinar is not designed as solicitation for investment or financial trading or ideas. These are just content and ideas that we're going to share with you guys. So please, the bottom line the lawyers want me to hit is do not misconstrue this as investment advice. If you need investment advice, please seek out the registered guys. All right. Same old slides, different year, but same slide. You know, we're very proud of our customer support and onboarding of Trade Ideas, which is a very comprehensive technological tool to assist traders and investors. And one of the ways, or a few of the ways we do that, well, first and foremost is our lost leader here, the free trading room. There's a lot of good trading rooms out there, however, they do cost money. But Barry Anderson in the Trade Ideas Live room pretty much gives the other rooms a run for the money, and free is a great price. You don't have to be a Trade Ideas user to come into the free trading room. Just click into our website at the top menu navigation. You'll see how to register for that. So he does a great job trading his own account, moderating a room of other ideas and people talking about their ideas, and of course demonstrating the product in real time as well. So it's a great place to go and hang out, especially if you want to kick some tires, the free trading room. And back to the webinars, which we are on now. We've tried to make it simple. Monday through Thursday, our webinar schedule is 5 p.m. Eastern. And on Monday, it's myself and Jamie. Jamie's hosting. Today is myself hosting with help from Andy, longtime friend and trader. And Wednesday is when Dan and Brad jump in and kind of talk about questions and answers and demo the product and what's coming down the pike and kind of show some things that we may not be showing, since they're basically the cutting edge of development, Brad and Dan. And the Trading Studio Thursdays, where Andy hosts that, his content, and Jamie rides shotgun and helps him. And one of the things that we just incorporated is the Friday support session, which is open to anyone from 11 a.m. to 2 p.m. Eastern time. Same format as we have right here, right now. Go to webinar, question box, answer, demonstrate, answer you in real time. The reason we put that Friday support session in every Friday is the last one-on-one training. It's not on here, but it's again part of this slide. We spend 1 hour with new traders that have subscribed to an active subscription to Trade Ideas. Now, the wait time might be 2.5 to 3 weeks, but that's not a bad thing. You know, in that period, you can join the Friday support sessions, and we do encourage you to try to get your hands dirty and get in there and play around a little bit, because when that support session for one-on-one does come around, we have a lot more to talk about, and there's a lot more quality time we can spend rather than, hey, I just unboxed this thing, show me how it works. Okay, you know, trust me from experience, the one-on-ones, they work better after you've got a little skin in the game and you've you know, played around with it a little bit. So, you know, please keep that in mind. But the Friday support sessions is my main point, open for everybody for 3 hours on Fridays. Come one, come all. If you have a subscription, if you don't, we'll help you guys design an alert. We'll talk about the markets. We'll do whatever you guys want. You guys drive the agenda, as opposed to today when myself and Andy drive the agenda. This is just a quick summation there from those first two slides. Subscriber growth is actually higher than it is there. We need to update that slide, but it's a graphical representation of how well the public, retail, and professionals alike are adopting our technology. And we could not be more proud of that graph for sure. All right, let's see. Let's go to the next one. All right, real quickly, it's still in beta, but it's a tool that we're developing for advanced. This is, if you're a skier, this is double black, black diamond type stuff. This is not bunny slopes. I just learned how to trade. How do I connect my trade ideas alerts to real-time trading? You're probably going to want to learn to crawl before you walk. So this is geared towards advanced users. If you want to, and you have an interactive brokerage account, and you have a premium subscription with trade ideas, you're already kind of enabled as part of the beta program if you wanted to connect your interactive brokerage account with the custom alerts that you can build in trade ideas. You cannot hook up Holly the AI. It's a common question. It's designed for your own scans and your own alerts for sure. All right, let's see. And for more information on that, tradeIdeas.com/download. We don't really support and talk much about this. It's still in development and it's an advanced issue, but you can email us for more information and we can send you out a packet for those that may be interested. So here we go. Same year, or different year, same slogan, same idea that no man is better than a machine and no machine is better than a man with a machine. Well, let's revise that to say no machine is better than a human with a machine. So we include the lady traders as well. But the idea here from Paul Tudor Jones, a very smart guy, is that he has embraced technology. But technology by itself is just not going to get it done. It's still a cyborg or a human element, man and machine, if you will. So there's still a lot of discretionary decisions that have to be made. But our wonderful product at Trade Ideas really does help simplify and bring down the list of ideas to actionable options that you can keep an eye on. So the agenda today, take a look at the market recap, kind of the last 5 days of the year, the beginning of the new year here. We'll do a Holly recap today of the AI performance. The trade of the week, since we've not had a trade of the week webinar in a few weeks, we'll go ahead and maybe look at a couple of ones from last year towards the end of the year, catch up on those, see how they're doing. New charts, some of you may have already noticed the new charts that might look different from an older version you have, but the great news is, and I'll tell you again, version 4.2.17 is now available. I'll show you guys how to get that, and in that new version are these new charts that we're going to talk about. You'll see on my screen. Sector glance, I think is important. Let's maybe take a look at the sector. That's one of the ways in which we did come up with the trade of the week this week, but we'll see what is coming out of the gate strongly in 2018 and what's been lagging so far. And then time permitting, maybe 2 or 3 chart requests if we have time permitting. All right, so let me go ahead and minimize the deck here. And let's bring up the spiders. So first and foremost, some of you may notice that we've got some interesting new chart details here. Well, let me quickly point out some of the highlights of the new chart features. One, the volume bars are now segmented. They're not shaded and overdrawn from the candles. They now have their own quadrant down here, and they're very snappy and very bright. And moving averages. This is really the only thing in my repertoire that I feel was missing, was the moving averages, which is great because now I can start adding another layer of some ideas in technical analysis and trading on charts and maybe what to look for and what not to look for. But let's start with the analysis of the markets. Spiders SPY 500. This red candle right here was the last day of the year, and so a little bit of selling and closing up positions on the last day of the year and closed just below. Look at that line. That's my 10 SMA, simple moving average. Very much held the price action all year except for the whoosh of the last day of the year. Opened up on the first of the year and have not looked back. So in a sense, where we are now, as I go through all the charts, we're in overbought land. Whether you want to use RSI for overbought, whether you want to use stochastic for overbought, whether you want to use Bollinger Bands for overbought, none of which I have on here, of course, but those are all indicators that if you people do use those on other charts, you're probably going to agree with me. This market is just a skosh overbought. As the floodgates opened up and the new money was being put to work, new money does not short sell. New money goes to work to the long side for 401ks and for retirement. But that doesn't diminish the fact that after 5 days of being shot out of a gun in 2018, we are way above our moving averages here. And so that'll come a little bit into play as I discuss the trade of the week when we get into that. But spiders closed on a perfect doji today. If we zoom in, you can see pretty close to a perfect doji. A lot of the stocks today, we had a very kind of a nasty last hour. So everything that I bring up here, we're going to have some selling at the end of the hour for the most part. So there's the spiders. The diamonds, which had a really nice year last year. The Dow, I think, was up 25% or something like that for the year, which is really off the charts, guys. And I just might even take that moment to please remind people that a back-to-back 20 to 25% year in the markets, I'm not feeling it, okay? I've been around long enough, and so is Andy, and this year in itself was amazing in terms of the double-digit growth. But when you want to start putting back-to-back years like that together, I haven't seen it. That would be something that I've never seen before. So therefore, we're going to talk a lot about entries, and I'm going to even qualify that the trade of the weeks this year, we had some beauties last year. Weight Watchers, it just kept going up. Square had a really nice move for a while. PayPal had a really nice move for a while. But this is all in a market last year, 2017, that was, double digit, 20%, 25%, depending upon what you're looking at. So I guess I'm trying to set the bar low, guys, and this year, I think it's going to be a little tougher. And by that, I mean, letting stuff run may not be the order of the day. We might, 3 weeks, 4 weeks from now, start talking about how already it's possible the quick, hit and run, 3 days in and then bang out, before the market turns back. Because I really have a hard time feeling that we're going to be able to put in the numbers that we put in last year. So there's your S&P, extremely overbought. Here is your Dow, extremely overbought. Here is your NASDAQ, extremely overbought. And then that brings us to extremely lagging, which just so happens to be the trade of the week, which we'll get to in a second, the Russell 2000. Russell 2000 tried yesterday to make new highs, but didn't, but actually did trigger today. It triggered a new high and then kind of sold off a little bit. So what I'm trying to show you here is in a market environment where we have a lot of things that are pretty much overbought and extended, we're trying to look for ideas that are more consolidative in nature or maybe even pull back and gap fill in nature. We'll see how the year goes, but for the start of this year, we were shot out of a cannon. Now, before I see if Andy has anything to add, I want to highlight, look at all the times at which this 10-period moving average held the price, held it perfectly right here, held it perfectly right here, and perfectly right here. And then the end of the year, a lot of selling, tax loss, whatever, but a lot of selling towards the close. So I'm not going to really include that candle too much because we've just exploded back above it. Well, the reason I'm showing you that is this has been the guiding hand that's been moving the market higher. And so it's quite possible that at some point in the near future, prepare yourself for maybe a pullback, and I'm just eyeballing it, to the 10-day moving average across the board in the S&P, across the board, maybe in the Qs. I'm spitballing here and eyeballing, but where could be a point in which we've had 6 or 7 days of up movement, many gaps, we're in for a pullback, we're in for a breath. The market's going to want to take a breath, but where's it going to dig in? My first place in a solid trend that we have to look at is going to be these fast line, which I call it, the 10-period. Some people might use a 9 EMA, which you can do on here, by the way. Let me just show you. Indicators, EMAs, look at that. You guys could go in and you could add an EMA if you wanted to, indicators, EMA, and you could go in there and add EMAs, modify colors, do whatever you wanted to do, and change the time period, 30 to 9, whatever. So the new charts are up. They're pretty intuitive. Again, the only indicators in the first round that we've got to work with are EMAs, exponential moving averages, relative strength index, RSI, which is probably extremely overbought, SMA, simple moving averages, and then our volume and average volume. And that's it for the first round of indicators, and that's all I really need personally. Where we are is I think we're ready for just maybe a little bit of a pullback, and I'm going to be watching those 10-period moving averages for areas of support. It wouldn't be uncommon for it to overshoot maybe on the open or during the morning, and then as long as we have a little bit of a wick and then pop right back through and close above those 10-period moving averages, that's a healthy price action to me. Before I move on, Andy, anything you want to add? Well, you're not on mute.
Sorry about that, Steve. No, you covered it really well. Yeah, I will add that, man, anytime you get to, markets like this, it's just been one heck of a orchestrated move over the last year. Very, very little volatility for the whole year, which is just, you just don't see that a whole lot, man. And I wouldn't be surprised if at some point it's going to happen this year. But gosh, man, it's just the kind of market that, when the move does come, you're going to look back and scratch your head and say, my gosh, why didn't we see this coming? Look at the move that we've had. It's just incredible. But all markets are different. You don't know when that's going to come. But and I agree with Steve. I mean, when Steve and I ran our Ditto trade, we these are where people we were one of the first lead traders for a Ditto trade, and customers could come and piggyback. They could attach their account to ours, and whatever trade we made, they got the same entry and the same exits. And when we got markets like this is where we were looking for laggers. And when we get in the trade of the week, you're going to we'll get more into that. But yeah, this is not the kind of market that we go chasing highs in, because you can get hurt. And what happens is the market keeps pushing higher. Then you have more money willing to go into the more risky plays. The stocks have been beaten up, all year, last year, and there can be some incredible opportunities in those. And so we'll keep an eye out for those as well.
Market keeps pushing higher, but it does it in a difficult way. Here's a gap up today, sell off to negative, back to positive, new high, no follow through on the new high, fall all the way back, close into almost a doji, kind of a hangman there. So, not the greatest intraday action. A lot of this market actually goes higher on gaps overnight in the European markets, but we'll trade the markets we have. But the markets we have right now, my first thought is we're a bit overbought. Okay, guys, where do I find charting on trade ideas? Okay, good question. Charting on trade ideas. Hey, first thing is, Lance, download. Let's just go ahead and get this over with. Download on the website, trade ideas, on the products page, scroll down. Newest public beta, 4.2.17. Charts. We have interesting new additions to the charts. You can see all the information here. So that's going to be the way to get it. Once you got it, the way to launch them with your new version, let me put this back in its proper place, is pretty much intuitively like we grab everything else that's a new alert or an indicator. We go to new and chart window. It's going to default to the queues. It's going to default to daily. What you need to do is go to the priorities, and symbol linking is already enabled, so that's good. You'll just want to go in and find out what time frame you want to use. It's going to default to daily. If you want to have a single chart that doesn't link to the others and just want to monitor what the spiders are doing, well, then you'd probably pull off symbol linking right here. So you could have a chart that's static in its own way, and you're watching throughout the day. As everything else changes, you'll see that one chart doesn't change. So hopefully that helps. And then quickly before I go on, somebody made a great comment, and I agree, thank you. The comment was, I would think the fewer indicators, the better. And you would be correct. I agree, and that's what we're trying to do to help newer traders, is not rely on indicators to get all the stars to line up in the planetary Roshan before you make a decision. We call that over-analysis paralysis. I think the easiest way to study charts is simple price action and support and resistance levels and pivot levels. And then, like I said, occasionally, I love that 10-day moving average. Here's a great example of that 10-day moving average. Speaking of, this was U.S. Steel trade of the week 3 weeks ago. Bought off that pullback right there. Had a nice 5-day move, and instead of pulling back in price, ex U.S. Steel consolidated sideways, even more bullish. And what was it waiting for? It was waiting for the supporting hand of the 10-day moving average to come up, and it didn't even touch it. It was so strong, and it had just like invisible energy just pushed it higher. So imprint on this kind of stuff right here, guys. This is the kind of stuff I really love. Stuff that's in an uptrend, going sideways. The moving averages are fanned out, and when the sideways action starts to catch up to the rising slope of the 10-day moving average, that's when I call it like, you know, a bird in your hand is just ready to fly again to the next level. So indicators, they can be good, but they can also be weighty, and they can cloud your thinking. I like to not keep an eye on too many indicators. All right, so market recap.
Steve,
behind
can you
this.
show Lance? Can you show Lance real quick how to find charts on the? I was going to tell him, but it's easier to show him.
New, it's under new charts, right? New.
Go new
chart
and
window.
then chart window.
Yeah, and that's it. It'll default to daily. So if you want to change the time frame to 5 minute, you can go in and change the time frame to 5 minute. Okay. All righty. So let's move on to the trade of the week, which is IWM, and I've kind of alluded to this earlier. Well, what we had is a couple things. A chart that was very interesting that caught my eye, something that we talk a lot about when we see the spiders, diamonds, and Qs all blasting through to new highs in the first week of 2018. IWM is going to do one of two things. It's either going to play catch up or it's not. And I feel that we had a strong case for it to play catch up, because if the money continues to go to work, some of these institutional fund managers might start looking at the smaller cap stuff and start allocating some funds to the Russell 2000 type stuff. So what we have is a nice cup and handle, very nice looking chart above its moving averages, all fanned out, like the way we like it, all stacked out. But one more thing I want to show you is coming into the weekend. Here's my sector analysis here, and I've got it broken down either today, which is the default, or I can go 5 days, or I can go 20 days. So if I go change in 20 days and stretch it out, here's the diamonds. They had a good 5 days of the year. Spiders had a good 5 days opening day of the year. Q's also had a good opening 5 days of the year. I'm sorry, 20 days, excuse me. I'm going on a 20 day. And then the IWM was lagging. Where'd the IWM? Here it is down here. So it's obviously the least of the four. And even on a 5 day, I've double clicked here on a 5 day average, it's still lagging. So it's basically a lagging play, trying to get a feel for the jump rope of where the market is, what the sector strengths and weaknesses are going to be, who's going to grab the baton, who's going to have leadership. We got earnings coming out pretty soon too. So it just felt right to go ahead and call an ETF that's been lagging in a very strong market. Now, one thing I want to say, I believe the stop is down here, around the 150, 140 level, I think. We have 2 more days of data since this alert content was created, and yesterday was a really nice attempt to sell off, and we bounced right back. And there it is yesterday, the attempt to sell off on the morning, and then a really nice bounce back. Well, for those that want to really be cautious here, I would see nothing wrong with using the low end of yesterday's hammer wick as maybe an updated raising stop, just to try and maybe really make sure this is a very conservative trade, because if we do not follow through to the upside and we start to roll over, and if the other markets start to get weak, well, it's going to be tough to have this one hold on. So, I was really hoping for some follow through. I thought we might be a little bit higher by today, but trading. Let's see. Missing anything, Andy, on the trade of the week for IWM? This is a bug, guys. I've got to update my newer version. This bug has been worked out. Don't worry. Anything I missed on that? No.
No, I don't know. The audio seems like it's getting a little garbled. I don't know if it's just me or does anybody else hear Steve? Yeah, it sounds like it's kind of garbling a little bit, but
well, okay.
maybe it's just temporarily.
Hopefully it's just
temporary. No.
Yes. So, Greg, Lance, now you don't have to sound okay. It was, but sound is okay.
Sounding better now. Yep.
Thank you for the crowdsourcing, all 10 of you that just jumped in there real quick. All right, so that's the IWM. Looking for, market participation, lagger. Maybe tomorrow's the day. We shall see. Couple of backtracks. The X I showed you earlier was the trade of the week towards the end of the year. Somebody asked me on Twitter, what are your stocks for 2018? And Andy and I both kind of agree. Anything infrastructure, steel, cement, rebar, Caterpillar, things like that. And let's take a look at CAT just for the sake of it. Yep. Boom, exploding off the new year, looking pretty good. So a lot of things infrastructure I think are going to be interesting to keep an eye on. So X, was a late call at the end of the year, still moving higher, working very nice. There was one more. Oh, IBM was being a real bugger towards the end of the year, and I think I know what happened. If we zoom out a little bit, IBM was not that solid of a year. I mean, it was up here about 180 to start the year, and it very well could have just been on the books as a losing trade. And what we call tax loss selling, IBM may have succumbed to some tax loss selling at the end of the year. There may have been some headwinds there. One never really knows. It's just, it's the institutional game. But in hindsight, which is always easiest, we might be able to say that was the case. We had a beautiful gap up the first of the year, and IBM is starting off the year wonderfully. So, it was probably an institutional thing being held back a little bit. Goofy things can happen in the last 2 weeks of the fourth quarter, and this may have been one of them. Okay, charts are real time. Yes, Lance, the charts are real time. And one of the last things you guys might notice on the new chart version is there's a distinct darkening of the color here of our risk reward envelopes. The downside gradient there being a smart stop, which looks like it's pretty much the low of today, and then an upside there being the upside price target. And for those of you that know, that is the same for both intraday and daily charts. For instance, if I wanted to buy IBM right here and the market was still open, the Trade Ideas logic is saying, well, give this portion down here, 163, your smart stop, and higher up here on the daily at 165.43. So the charts, they are real time, and they, during market hours, are going to give us these risk management gradients, I guess, as I like to refer them to. Also at the end of the year, I think we had a couple of airlines, but those haven't really done a whole lot at the beginning of the year. So we're going to come back to sector analysis as part of our repertoire today. So we'll touch on maybe some more of that stuff. But X and IBM were the last two calls of the year, and they're both looking pretty good for the most part coming into the new year. All right, where to next? The AI today. So I'll start off by giving you my little AI. I like to remind people that this is nothing more than a tool. It's not a golden silver bullet or a golden goose, but start off at the 25,000 foot level and look and see. You come into today, first thing you notice, interesting. All of the back testing has done nothing but produce long strategies today. Not a single short strategy on here today. Found that interesting. And then, of course, as the day went on, if we had had zero trades, well, that would have meant that there was no long strategies to be triggered. But as it were, we did have a few long strategies triggered. And so for the most part, then, the directional bias today was, in fact, long. Trade count, pretty low on the trade count. So, the AI was struggling to probably try and find things that weren't too overbought, but could still be a decent, and we'll take a look at a couple. They were definitely bounces. They weren't overbought, and those are the ones that did the best. And lastly, before I hand it over to Andy, because he's always got some interesting AI observations, take a look at the end of the day here. Here's the cues for today. Take a look at the histogram of Holly. Risk on basically is what we're looking at, and so there's our pinnacle of the day on the histogram of profit, which coincides pretty much to the pinnacle of the day on the 15-minute chart here in the market. And then as the general market does start to get weak, well, the risk on trades, which are trades that are left on or left open after Holly's exit, of course, they're going to start to deteriorate as well. If we click back to the risk off category, we had a nice push in the morning, quiet little lunchtime, a little hiccup in the middle of the day, and then of course the sell-off at the end of the day didn't really help either. So risk off, for those that are asking, that is the exit time or exit reason for the AI, whether it's timeout or a stop loss or a trailing stop. And risk on means what happens if we take it all the way into the bell? How does it look? And so the risk on tab is usually going to mirror kind of what the intraday market looks like, and that's kind of what I'm showing you right there. So from an individual standpoint, you want to add anything there, Andy?
To talk about the overall strategies too, and it's interesting because Holly kind of was thinking like we were thinking. I mean, we
Yeah.
just talked about how we want to buy stocks that are kind of pulling back and setting up. Well, you notice we had a handful of bullish trend change. As a matter of fact, the top 2 producers today was bullish trend change.
They were not overbought, were they?
Exactly. No, they're pulling back on the daily, and now Holly is detecting, in other words, her parameters are being met, and she fires off an alert based upon a stock that has been selling off, but now could be, potentially changing directions. That's very powerful. It's the kind of stuff that you're not looking for. And trust me, Steve and I, we traded for 20. We're still trading, but avid day traders for 20 years, or 17 of those 20 years anyway, and your naked eye just doesn't spot opportunities like this. So probably the first one I'd like to look at, Steve, is that LJPC.
And that's what we got, LJPC.
Yeah, that's a beautiful trade right there. That's what we call a no pain trade. In other words, the alert goes off, it is triggered, and the price never goes below the trigger price, which is very nice.
And as you'll notice, it got kind of caught in the end of day downdraft there too.
Real close to that target too. Look at that.
Yeah, almost hit it, but it did pull back.
Yep.
Next one. Same strategy.
Next one. Yeah, ACAD. Yeah, there you go. Bullish trend change. Look at the daily there. It's been just about 7 days ago was hitting a multi-month high, and now it's pulling back. And Holly detected, maybe some price change in the first hour there, and sure enough, took a trade. Did pull back a little bit after the trade, but not much. Not a whole lot of pain there, and then went back through. And once again, just a very nice trade that it's going to be difficult to find on your own. But our all of our strategies that we have implemented into our AI strategy, Holly, based upon back testing and optimizing, put forth you a very, couple of really good trades there. And I'm not going to go into any more. There's a couple at TWO. Actually, Steve, we were going to talk about that we were talking about a couple of stocks that you may want to keep an eye out going forward.
Let me just say, hold that thought before I go forward. What the AI is showing us here, guys, is where's the alpha? The alpha is in the oversold bounces on support, not trying to chase stocks that have been up 6 days and then gapped up a 7th day and then just went nowhere. All right.
Exactly.
So going forward, people say, well, how do you use Holly for swing trading, or where did you find that stock? Well, sometimes we find stocks that are very interesting that we didn't participate in, but we'd like to keep our eye on. And this was one that came out to me. And one of the reasons I liked it is, I guess I'll just do a little drawing here so we can kind of really drive home what it is we're trying to show here. So it's a break of a wedge for the most part. I am not very good.
It's not easy to do.
Okay, so for the most part, I'm going to kind of draw a wedge there, and we're going to mark up another trend line up here. And once you grab that circle, you're good. Get that circle, I'm good. So coming into today, this is what we saw. And what I'm liking about this now is that we closed on good, decent volume. We closed above. It's not a wick out and then back into the range. We had a nice painting of the price into a corner here, and the price was slowly wedging and coiling up, and then boom. Not only was the trigger outside of the coiled wedge, but we closed at or near highs. Therefore, this is one, and watch closely, I am going to say heart. I like that stock. And what that means is that stock is now on my permanent favorites. And if I ever want to go monitor my favorites, I can do it a couple ways. I can enable it as a symbol list, or I can go just directly to the My Heart channel. So every single one of these guys in this top list have been hearted by me at one time or other. If I go through them, you'll see the charts are filled in with red. And so this is a way in which we can keep track of stocks that are interesting, that maybe we didn't participate today, but we would like to keep an eye on the radar going forward. I think that's where you were going with that, right, Andy?
Yeah, absolutely.
All right, so we're going to bring back our Can the volume bars be colorized? Yes, we can set the colors of the new volume bars. G, to answer your question, can you trade directly from TI? That's a different question. That is Brokerage Plus. It's not something we're supporting today, but if you want more information on trading directly out of Trade Ideas, it's called Brokerage Plus, and Scott will give you the email at the end of the webinar to inquire more about that. Okay. Was there one more that you liked that we wanted to keep an eye on going forward, or is it
Yeah, let me see them again. I know we discussed them earlier. I think it was Noah. Noah's kind of
yes.
it's a very in vogue China stock, and it's kind of breaking out of I don't know if it's an all-time high. It might be, but it's definitely a 52-week high, and it's probably far back as we can go. So
China stock.
Yeah. You know, I don't think you're late to the party, but Steve can draw a line back there to the November high. I think, you know, as long as it stays above that level right there, this could be one that could have some extra, you know, movement to it. China is really hot right now, and
well, that's why I kind of doubled up on that. If I double click the 5-day, I think was it 5-day, or was it? Oh gosh, what was it? Where was K-Web kicking butt?
That's position in 20-day. Probably a change in 5 days.
Yeah, there it is. I threw myself off because it wasn't dark green. So yeah, K-Web. That's our China. So China has had a really nice move in the first 5 days, and I guess we're just going to go right into this because this is where I wanted to go next. Okay, what I wanted to do next, guys, was take a look at where we are in the first 6 trading days of 2018, and do so in a way in which maybe we can find not some stuff that we want to chase, like, you know, K-Web up here, that would be a chase for sure. But, you know, maybe some of the stuff that's been beaten up a little bit. So if you'll notice, I'm sorting by the change in 5 days percentage. So of all the ETFs and all the sectors we're monitoring here, the China stocks have had the biggest bang up opening to the year, up 9.6% in the opening year. OIH, oil service and energy sector, also had a really nice opening week. So again, SLX, I've talked about that, you know, steel, infrastructure type stocks, oil again, also having a really nice pop to the opening of the first of the year. And semiconductors actually gave a little bit back today. So this might be the beginning of what maybe we're going to see in some of the other sectors that I feel are extremely overbought. Let's go down here to the not so hot. Let's start with maybe XLF. Well, XLF, interesting. XLF has been in a very, very tight range and has not really participated along with the rest of the market. It's kind of just chewing itself sideways here. Not quite sure what to make of that. Here's our IWM. We've seen that a few times today. Retail, not breaking out with the rest of them. I guess what I'm going to look for here is kind of like a nice pullback of those 2 trades like Holly had earlier, where we have maybe a sector that's pulling back but might be digging in and maybe ready to receive the next baton for the rotation. And let's see, UNG, I think, UNG gap down. That's GDX, excuse me. Gold miners gap down pretty good. Yeah, the airliners are kind of rolling over, and that's nothing really special there. Well, gold miners, we could have something here because let's just take a quick look. Gold miners have a pretty good pivot point right there on that orange line. You know, it was resistance back here, and it was resistance again, but now we're pulling kind of back to it, where the gold miners wouldn't be surprised to see tomorrow or the next day maybe some bids come back into the gold miners, because it's all about sector rotation, guys. You know, you can only buy these green candles for so long before we get some sort of a pullback. TLT, I'm not even going to mess with that. That's treasuries. Ooh, that's pretty ugly. I don't think I've seen a sector this ugly in a while. What sector is this, Steve? Real estate, our REITs, commercial real estate, Dow Jones iShares. So the footprints in the sand.
Those are going to trade along with bonds. Yeah, I think it's okay.
Yeah, footprint in the sand with the REITs and the commercial real estate is showing us a really ugly start to the year. There's nothing technically healthy about that. I wouldn't try and buy that pullback. You're basically breaking out of this long range that we've had going back here. So that's IYR is a little concerning. You know, as I went through these, and I didn't hit them all. KBE and KRE are the banks. They're looking like they might want to do something, but they're going to need some follow through. But it's going to be hard if the markets start to pull back. So I think as I went through this whole exercise here, Andy, the banks look kind of interesting if they can, continue to break through, as we also would like to see the IWM, same kind of a scenario there. But in terms of what's interesting in a pullback to a level of pivot, I think the gold miners, they could be interesting in the next day or two. We'll see. The GDX and the GDXJ. I think that's one that I had marked up. Yeah, the junior miners is one that I had marked up. Did you see anything in there that I missed?
No, let me take a look at IBB again.
Okay.
Yeah.
I don't think we even looked at it. That's why.
Okay.
All right.
Yeah, it has potential. Still lagging. I mean,
not one of my favorite sectors to swing trade, guys.
That's true too. I know that.
Yeah, biotechs, but you're protected with the diversity of an ETF like IBB.
Well, there's some very good ones out there. The ABBV, Amgen, Celgene. Some of those ones that have a huge pipeline, they're fine. But that's one of the strongest.
I saw Illumina coming through today.
That one was explosive.
Illuminati.
You're not going to get your head chopped off too much on ones like that. That's for sure.
These guys have such a giant campus 2 miles from my house. I literally want to go out at 2 in the morning one night and spell Illuminati. No, I want to spell Illuminati on their sign. Side joke. Okay, so that's the sectors. Just again, back to what's been strong today and what's been strong the last 5 days. Be careful. I really feel like we're due some sort of a breather, some sort of a pullback. I do see your comment there, David. If the markets go up 2% in the first 5 days, it's going to be a treacherous year, historically speaking. I've had that feeling in the past. I can't point my finger to what year it was, but Andy, you recall where you start the year off with a bang and you go, boy, that was a head fake.
Mm-hmm.
So there's always that possibility, David. Exactly. And I'm just going to marry it back off with what I was saying in the first 5 minutes of this webinar, guys. What we saw this year was a freaking anomaly. 20, 25% respectively for the S&P and the NASDAQ and the Dow. Don't expect to see a back-to-back year like that. And because of that, again, a lot of the trade of the weeks might be a little tighter on the stops, might be a little tighter on the targets, might be a lot more hit and run type stuff rather than buy and hold, because hindsight's 2020. 2017 was definitely a buy and hold type year. But I'm here to tell you that this was a very unusual year that we just came out of. I'd be surprised, to see if we do 5 to 8% this year, something like that. I wouldn't be surprised. I'd say I predict maybe that's where, an honest year of gains could come without giving back too much of what we did in 2017.
Mm-hmm. And not only that, this is just some helpful information. I always discount the first couple of weeks of the year. I don't put too much on the pin action in the first 2 weeks of the year, because there's repositioning, there's new money being put to work that could be causing this move up. It's not on huge volume. It's not like a major, volume breakout. So, let's see what happens after the first 2 weeks, because there's a lot of money coming in, to put in play.
I'm sorry, I did read David's comment wrong. He didn't say treacherous, he said tremendous, and that's a 180-degree difference.
That really is.
Let's back it out a little bit, maybe. Forget the 2% almanac, stuff like that. I think you go back to, so goes January, so goes the year. Like Andy just said, let's give it a couple weeks.
Well, sell in May and go away didn't make you a whole lot of money over the last 8 years either. So, they may work on average, but any given year can just be an anomaly.
David, I just feel the pent-up demand that needed to get long this year was there, and that was the big shot out of a cannon that we had last week. We'll see where we go from here. It's really too early, but I'm very skeptical on back-to-back, 20% moves in the general market. What version are you running, Steve? Yeah, I'm being a bit of a baby here. 4.17 is available. And look at me, I am on 4.14. So I need to download the new versions and patch up some of the bugs that we got here. So I am a little bit behind, and I will do that this evening. Go ahead.
I want to hit Stan's up. He's dropped that question in there twice. Stan, at the end, Scott's going to give you an email at the end, and send it if you want to send that request. It's the best place to do it. Any kind of request that you might have would be to send to info@trade-ideas.com, and Scott will show you that there at the end. But we do see your question. But drop that into our email. It's probably the best.
Yeah, that's not a question for us. That's a pricing question, just in case anybody's wondering. Could you provide the link for the recording? That's going to be up later tonight or early tomorrow on our YouTube channel, Trade Ideas YouTube channel. Pretty easy to find, and recent uploads are the ones that have the recent uploads are the ones you're going to have for the webinar. Jeffrey, you don't have the new volume bars on 4.2.17. Do me a favor, can you come in tomorrow to our live chat? Just go to trade-ideas.com, and on bottom right, we've got live support, and we'll have somebody take a look at that because they should be there. It's just a matter of getting them going. Make sure that, indicators, you start with indicators and go to volume. And then in the volume, your chat area is going to want to be, chart area is going to want to be chart area number 2. You can make your colors anything you want your volume bars to be. Without looking at your machine, I can't really help you, but that's the reason for coming into the live support help. Tomorrow, Bill or William or one of us can take a look and definitely try and help you out. All right, so this will be the moment. I saw Christopher was first, so we'll go ahead and do CYBR, but if we want to add maybe 2 or 3 more symbols, we can take a look at some stock charts here for the remaining 5 minutes that we have. And Christopher's a regular, and I did see that earlier, so we'll go CYBR as our first. Let's take a look at this chart, and what do you see? This wasn't one of the Holly plays today, was it? It was. That's what I thought. It looked familiar. Okay. So your question is CBY or possible swing. Okay, what would it take to get a possible swing trade out of CYBR? Software publisher, so they're not biotech. This one's kind of tough. I mean, I'm not really seeing anything significant other than this 20-period moving average is kind of holding the price down. You can see that it tried to trade above that red line today and then was squashed and closed right at it. So that might have been the seller's exclamation point to let the buyers know, this is it. I do like the long tail this morning. Let's see, a little bit of selling this morning, some sideways action, and then closing on highs. You could take a chance with it, Christopher, but I would say probably use today's lows or maybe just below it as your downside. I don't know. Do you see anything differently there, Andy?
Yeah. I mean, I can see what he's thinking. You had kind of a high volume sell off there, and then a nice bounce back for 3 days. Try to sell off again and bounce back off its fast line. I guess it's what it is there. It's low risk because I don't think I would want it to go back to below yesterday's bar. So. But it has a lot. It has a lot to get through on the upside. If Steve can zoom out a little bit, you're gonna you see you have more moving averages. You have congestion going back there around 44, major congestion. It has a lot of Cat 5 turbulence to get through. But
I can redraw those lines. CYBR. We had a bug in our moving averages, which I need to update. So another thing, the blue line is kind of the median in the road, if you will, that I kind of like to look at. If you're above the 50-day moving average, okay, I'll consider you healthy. If you're below the 50-day moving average, I'm not really in the mood to consider you healthy. So I also am a little bit looking at that. The kind of stuff I like is the stuff that's moving higher with fanned out moving averages, pulling back to moving averages, moving sideways with the moving averages pushing it higher. That's a lot more clean look to me, in my opinion. Okay, yes, Stan, I sent you an email about the request. Just send that to info@trade-ideas and we can help you. PTIE long is the next one in the queue. Oh boy.
Whoa.
Okay, so this was obviously a darling stock today on some sort of news. Pain Therapeutics, right off the bat, it's a pharmaceutical, which means it's got a pipeline, and all of this movement is probably predicated off its one glorious product that got great news today. Um, it's just it could go anywhere from here. I really don't know what to tell you. I mean, you can see how much it overshot, and these guys up here are the short sellers out there, the deep state short sellers that just wait for these kind of moves, and they just start piling in short and piling in short. So I don't really have an opinion. Go ahead.
What you can do in a situation like this is a lot of times when you get just an exuberant, exaggerated candle like that, over the next 3 or 4 days, it might start to kind of wedge. Maybe look at CNET, Steve, real quick. It's very similar to that candle.
Yeah, we need more. We need some more data.
See what we have here. You have a big, overshoot, and now it's finally, kind of starting to wedge. And then what'll eventually happen is it's going to either break out to the upside or downside of that wedge. You might start to see that develop in PDIE, whatever that was we were just looking at.
I call it like plucking a guitar string. You pluck it, and it comes back, and then it kind of finds its center. And once it finds its center, now we can start to define, where the channels and the brackets and the consolidations are. If it starts to bleed down, well, then you're probably just going to want to let it go. If it starts to break out, or you get a big pop intraday with some volume, well, then, hey, it could be back on. You never know. But a lot of times, charts like that, and I see your comments, nasal spray helping with the opioid crisis. There's certainly a great story there. All we can go on are really the footprints in the sand. And so it's like asking about CNET on day one. Look what happened the next day. It gapped down and just sold off the whole day. It's a real crapshoot as to what's going to happen with the stock like PTIE after today.
Right. That's what I'm saying. Be patient and let the setup develop. That's what you need to do.
All right. Last one is BW Long. This is electronic components. Wow, it had my attention a couple days ago. Now, it had Holly's attention a couple days ago, but I don't really like what it's done. Yesterday, it threw up all that downward come out roll selling on the open, which I talk about, and then they buy it back. Well, coming into today, if without this red candle, I might be giving you a completely different scenario on this stock, because that showed a rejection of the sellers down of the sellers down here as the buyers pushed the price right back up into play. But today, kind of ugly. Kind of back in no man's land for me. I think you definitely don't want to see it trade below there. And once the algorithms, humans have to program algorithms, and they have to have waypoints. And believe it or not, they look back in the history to find out where the waypoints are. Where's the levels that we can drive the price down to and see if there's any fear or consolidation or stop losses. If so, continued selling. If not, then price bounces right back up. But at this level, I don't really have. I would have liked it a lot more yesterday, and then I would have gotten pretty discouraged with it today. That's about the best way I could put it. All right. The graphic that showed up with the blue sky. What triggered that? And how do we use it? Okay. Well, this is again. This is every single stock we type in. This is Trade Ideas Logic Risk Management saying if you were to buy the stock at the current price, 569, your downside, Trade Ideas is going to base your downside based on pivot, support, resistance, and a bunch of other secret sauce of volatility right here. And so for newer users, our Trade Ideas charts are trying to help train the eye as to where the downside stop loss should be and where the upside profit target could be. Pretty sure that was your question. Yes, sounds good. Okay, Scott, come on in and let people know what's going on for the new year, and I will bring the slideshow back up.
Yeah, thanks, Steve. Right, so a couple of reminders on the way out. We have a podcast, and we hope everyone's subscribing to it. Go ahead and go to whatever app you use to listen to podcasts and subscribe to. Just search for Trade Ideas Podcast and then hit the subscribe button. We're going to have a guest on this Friday, young guy who had a really great story about how he came around into trading. So we're just kind of confirming him as a guest, and he should be a good one. So again, just search for Trade Ideas Podcast pretty much anywhere, and then subscribe to it in your favorite application. Good stuff. We've announced this before. We want to reiterate that we're having a price increase middle of next month. It's going to go up about 20% across the board, but don't worry if you already have a subscription. Your subscription remains unchanged as long as it's active. So between now and February 15th would be a great time for you to evaluate if you want to be in premium, if you want to have an active subscription at the current rates. Go ahead and use one of our offers, like the code we're giving out today, to start your subscription with the first installment at a discount, and then lock in the 2017 rates as we increase into 2018. We've been adding a lot of features to our product, and it is continuing to grow and become more and more valuable. So, we feel very justified in doing this price increase. But the good news to all of our subscribers and all of you currently in the know about trade ideas is that you can just maintain the current rates, stay in at the lower premium annual. That's really the one you want to get into. So speaking of that, we do have a code that's good this month from this webinar. It's new trades, all caps, 15% off that first month or first year. So you can start off Trade Ideas Premium at $18.88, less that 15%, and lock in that rate permanently. As we said before, it goes up 20% next month. So again, any questions about that? You can also download this. Click on the handouts panel. I always forget about that, and expand it. Click on the little download link there, and you can keep this this page and some of the other ones, including the one with our contact information. If you have any questions, including if you wanted to send a suggestion for the software, info@trade-ideas.com is the best one. That goes to our help desk software application, and then it gets routed to the right team member to address it. If you want to reach out to Steve directly, he's Steve @ or you can reach out to Andy, Andy @. Follow us on Facebook and Twitter, and Steve Gomez is Today Trader on Twitter, so be sure to be looking out for him on there. Thanks, everyone. We'll have a recording up later on tonight or tomorrow morning. Keep an eye out for you in the next webinar, and have a good one. Thanks, Steve.
All right. Thank you very much. See you
Thanks,
next
everybody.
webinar.
Later.
See you Thursday. Bye-bye.